Imagine stepping into a world where every financial decision can either make or break your investment dreams. We are growthsense.com. We built a platform that allows investors to buy, sell, and invest in real estate properties of all kinds, in all shapes, and in all conditions. Navigating the realm of hard money lending is like walking a tightrope, balancing between high rewards and significant risks. What if you could master this balance by understanding the 7 key interest carry costs that every investor should know? Hard money lending is a popular choice for real estate investors, especially when traditional loans aren't an option. However, these loans come with higher interest rates, usually ranging from 7% to 15%. For example, in 2024, many lenders are offering rates between 9.5% and 11.99%. These rates reflect the short-term nature of hard money loans, which often last only 6 to 18 months, and the higher risk lenders take on. But interest rates are just one piece of the puzzle. Let's break down the 7 key interest carry costs you need to be aware of. Number 1. Interest rates. Hard money loans have interest rates that can range from 7% to 15%. In 2024, many lenders offer rates between 9.5% and 11.99%. It's essential to compare different lenders because rates can vary based on the lender's risk assessment and the specifics of your project. Be sure to read the fine print to understand the total cost of borrowing. Number 2. Origination fees. These fees usually range from 1.5% to 3% of the loan amount, but can go as high as 5%. Origination fees are charged for processing the loan and can significantly impact your expenses. Unlike traditional loans, hard money loans come with these upfront costs due to their short-term nature. Always negotiate these fees whenever possible. Number 3. Loan terms. Hard money loans typically last from 6 to 18 months. Some lenders may offer longer terms for specific projects, but this is less common. It's vital to pay attention to loan-to-value, LTV, and loan-to-cost, LTC ratios to avoid over-leveraging your investment. Number 4. Additional closing costs. Beyond interest rates and origination fees, closing costs can add up quickly. Underwriting fees can range from $500 to $5,000, depending on the complexity of securing the lender's interest in the property. Additional costs, like property insurance, can further eat into profits. Number 5. Balloon payments and interest-only payments. Many hard money loans feature balloon payments at the end of the term, requiring you to pay off the entire loan balance plus any remaining interest in one lump sum. Some lenders might offer interest-only payments during the loan term, easing short-term cash flow, but resulting in a large payment at the end. Number 6. Prepayment penalties. Some hard money loans include penalties for paying off the loan early. These penalties can range from a percentage of the remaining balance to a set fee. Always inquire about prepayment terms before finalizing a loan agreement. Number 7. Market conditions and timing. Market conditions at the time of borrowing can significantly influence interest carry costs. Interest rates may fluctuate based on economic indicators like inflation or changes in real estate demand. Keeping an eye on market trends can help you time your borrowing more effectively. Understanding these costs is crucial for making informed financial decisions and ensuring your investments remain profitable. Interest rates determine how much extra money you will pay back on top of what you borrowed. For instance, borrowing $100,000 at a 10% interest rate for 1 year means you'll owe $10,000 in interest alone. Origination fees and additional closing costs also play a significant role in your overall expenses. These fees can quickly add up, eating into your profits if not accounted for in your financial planning. Several factors affect hard money loan terms, including your credit worthiness, property value, market conditions, loan duration, exit strategy, experience level, loan amount, and property type. For example, a borrower with a strong credit history might secure a more favorable interest rate than someone with a weaker credit profile. If you're looking for lucrative real estate opportunities, finding distressed properties can be a game changer. Distressed properties are often available at lower prices due to their condition or financial issues. For example, a property valued at $200,000 could potentially be acquired for as little as $100,000 if it needs significant repairs. GrowthSense.com is an invaluable resource for investors seeking distressed properties and other real estate opportunities. The platform offers tools and listings that allow users to identify potential investments based on various criteria, streamlining the search process and helping investors quickly find properties that fit their investment strategies. Envision a world where your financial decisions lead to substantial profits and exciting opportunities. By understanding these key interest carry costs in hard money lending, you'll be better equipped to navigate this complex landscape and achieve your investment goals. Visit growthsense.com today to find distressed properties and more valuable resources that can help you make informed investment decisions. Your journey to lucrative real estate opportunities starts now.